Let's branch out and talk about investing around the world. Jason Assoud joins us from Rayliant Global Advisors on the line. He's also the chief economist at East West Bank, I believe an active teacher as well. Jason, thanks for being here.
Glad to be here, Oliver.
What are you most excited about right now? Because you guys have a suite of funds, mostly with an international bias. And I'm thinking today with NVIDIA as my own bias, how does that impact the rest of the world? Can you give me a quick thought on that one?
Well, when you think about NVIDIA and in the frothy market that we're in right now, it sort of harkens back to, let's say, Cisco during the tech bubble, right? And when you look at the projection they had at the time, they were not wrong about all the hardware that needs to be bought and deployed. What they were wrong about was it was not all Cisco. So as I'm looking at the AI revolution, I think we're grossly underestimating the value that can be created, but we're also grossly overestimating how much of that value is going to be captured by, say, the NVIDIA and the companies that you see today. And I say a lot of international companies are competing directly with NVIDIA and may have cheaper and better solutions as we deployed hardware worldwide. So think of emerging Asia as the prime location for hardware.
It's amazing that despite our leadership on that front and an incredible run in NVIDIA and others, that generally, if you go by indexes, you would be better off this year still investing abroad than in the US. How long does that trend maintain, and where does it come from if we are leading the front? Is it a story about a perhaps a margin sort of arbitrage on what they're getting for what they're spending on their analogous products?
Well, Oliver, to give you a little data, kind of post the kind of the 2000 internet bubble and the correction, there was a 10-year period where emerging Asia outperformed the US by about 9 percentage points per year. And so that's kind of the data I want everyone to focus in on because it's been a long time since we've seen any kind of emerging market, international market outperformance versus the US. But right at the front end of the internet revolution, I would say it's going to repeat right at the front end of the AI revolution. You're going to see massive hardware redeployment, right? We're going to have to reroute the entire infrastructure. We're going to have to change all the data center, all the cloud centers. And hardware has always been Asia's game. So I expect the same thing to occur again. And this isn't that US is going to lose its leadership in terms of innovation. I think once all the hardware is deployed, of course, all the software application, the business model innovation is going to take over, much as Google and Amazon did. But I would say the front end of it, it's going to be a lot of the hardware makers, and they're the most mature, most efficient in Asia.
When you talk with the investors of your products, when you're selling your funds and you're thinking about an institutional, larger advisor audience, how much of this is about giving an alternative to their traditional 60/40? It seems like so much of the asset manager conversations today I have are geared around bringing in either alternatives or uncorrelated assets that won't get swept up if you get a sort of inflation driven pressure like 22. Is this part of that solution?
Absolutely. So, Oliver, I was talking about it from a tactical perspective, but I would say emerging markets, international markets, they're not a trade, right? They are a core part of your portfolio as a great diversifier. I mean, this year, you're absolutely right. Emerging markets, last year, emerging markets and international markets actually outperformed the US. So we've been living in a wonderful bull market, which has gotten quite expensive. But what we're forgetting is there are cheaper markets elsewhere also experiencing a bull market on the back of AI. And so if you're going to ride the AI wave, right, it may make sense for you to ride other parts of the markets that are less correlated to the US, that are cheaper than the US.
Which then gives you something to kind of hang your hat on if things do have that correlated downside here. Jason, kind of thinking also about the business model too. The last point is we're thinking a lot about advisors here on the show. Yesterday we had Bob Boros from Hightower on. Was talking about their NEPC deal, which is really about bringing OCIO into their model. How has that opened up the door for more kind of bespoke solutions and alternatives that might include an emerging market fund?
Yeah, absolutely. If you look at all the models that advisors have used, and you can't blame them, right? They have used something that's very US centric, very 60/40, and that's done really, really well. It's done so well, you almost go, why do I need anything else? Right? Why would I ever need stocks outside of the US? Right? Why would I ever need something more complicated than 60/40? But precisely, your point, the index is so concentrated, and it's concentrating the best performers that are the most expensive. And even then, it's underperforming some of the diversifier assets, right? And so I think the concept of diversification, the concept that if you're going to buy an exposure to AI, it's not just opportunities in the US, there are opportunities everywhere else. Some are cheaper. So I
Yeah.
really think the international model as a model component for advisors is something advisors really want to look into, right? It's you got the 60/40, you got tax issues, so you don't want to rebalance out of that. What makes sense is to look for models that are much more international, emerging market focus as a good complement to the US focused models that you already have and have a huge embedded gain in.
You got competition, Jason, from all these funds that are gearing towards like the anti-authoritarian. We had another one on last week too. They kind of seem to be eating into some of the international trade. Just real quick.
Well, when you're diversifying into international, right, you can throw on some ESG, to
Yeah, kind of
screen
like
out
that. Yeah.
countries you don't like, right? But I would say from research, governance is important. You absolutely want to care about governance, but it's less about kind of the political structure as it is about do
Mm.
they have good regulators, right? Do they have good rule of law, right? If there's good shareholder protection and there are consequences to sort of bad governance, you're going to do well. Like so, focus on countries that have demonstrated nothing is going to be U.S. quality, right? So that's not pretend, right? Like we can find U.S. or better than U.S.
Right.
quality type of governance, but there are going to be some, basic good housekeeping quality that you're looking for, and that's going
Sure.
to be important. That's why you got to be a lot more active in emerging markets because governance matters. It matters a lot.
And hopefully our house doesn't get too dirty because I keep hearing that our own scores have gone down on that front.
Our score
Jason,
is
let's
abysmal now.
right. It's getting worse. Jason, let's continue the conversation. Appreciate you being here.
Absolutely.
Great stuff. Jason Asu at Rayliant Global Advisors. Ray E, the emerging market fund, by the way.